Hello everyone, this is the pre-market report video for today 27th October 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, after our Indian market, European Central Bank kept their interest rate same as previous 4.5% and in line with the market expectation. This is the first positive news. Then the second positive news is about US macro. US Bureau of Economic Analysis released the US first preliminary GDP data for the third quarter, and as per that, US GDP grown by 4.9% against the expectation of 4.3%. In comparison, in the same third quarter, China also at present grown by 4.9%. Which means US GDP growing speed is matching with China. It's a huge psychological positive for US investors since US is nullifying China's economic growth with them. Then another macro, core durable goods order, month-on-month basis for September increased by 0.5%. Again, it's also above the expectation of 0.2%. Generally, this is very positive since at present it's kind of sure Fed won't increase the interest rate in the upcoming meeting. Also, Fed now got this new bond yield high issue, and even last night 10-year Treasury bond yield falls back around 4.8%. All these were positive. However, yesterday European market, US future market and US spot market all crazy negative because of this further escalation in the Middle East. Some might think, and even some asked me this question in the comment section, that Russia conflict has been there for a while. Why market didn't react for that rather than it's reacting for this Middle East escalation? Again, all this geopolitics, there the conflict was between the same historical background people. Here the conflict is between the different historical background people. So the chance of escalation quickly spread into other regional parties is very high here in Middle East rather than the previous one. Also, in contrast to the start of conflict, now the aggressor is an ally of G7, so it's creating all the internal moral conflict. Again, I'm not speaking in support of either party, but I'm just trying to explain why this conflict is influencing the financial market. Anyway, in addition, last night Facebook posted not so good earnings results due to their low ad revenue, so it added the negative momentum. To be honest, even if they delivered good results, still I expect US market to fall. Here is the thing, or we need to think from the shoes of big hedge fund manager. None of these big 7 companies like Facebook, Google, Apple, etc., none of them were the big dividend paying stocks, and only way of making money in those stocks is by constant cyclical rotation of buying and selling in the short term. That's how the big investment firm can show the increase in quarterly profit. And that's the reason these stocks always trades at very low P ratio. Lately, in the last 6 odd months, on an average, these 7 stocks increased over 40%. So from the hedge fund manager's shoes, they have to book the profit now. This is what happened last night in US. Middle East conflict escalation introduced the negative momentum, and profit booking capitalized that and closed significantly negative. It's just pure profit booking, and it was evident in US VIX as well. Despite this huge negativity, VIX increased only from 20.2 to 20.7. Anyway, in the end, Dow Jones decreased by 0.76%, S&P 500 down by 1.18%, and Nasdaq crashed 1.76%. However, on the positive side, so far none of this was transferred into Indian market. For example, before half hour, GIFT Nifty was indicating a flat opening. But just 45 minutes ago, before the GIFT Nifty early morning close, in European Union Brussels summit, they called for an international not pause in Middle East escalation. I'm saying this because in that summit, they argued over 1 hour just to decide whether to call pause or pauses. Basically, they made a strong comment to de-escalate the situation. Thus, now GIFT Nifty had an immediate end spike as soon as the announcement made. So at early morning today, it closed at 19,005. Since yesterday was monthly expiry, so it's difficult to narrow the premium range. Still, I'm guessing for the moment it's indicating 60 to 100 points gap up opening. Then in case of Indian ADR, it's similar to yesterday. Only difference is yesterday HDFC Bank ADR positive, today ICICI Bank ADR positive. Other than that, all closed negative. On the positive side, at least roughly 50% less negative than in comparison to Indian markets. Again, this also indicating at least positive or gap up opening of 100 points. Let's see whether it translates or not. About institutional activities, it's just crazy. I checked all the bulk deals, there was nothing. But still, yesterday, the net sold for 7,700 crore rupees. And the very important positive news, equally DII net bought slightly less 6,560 crore rupees. So the good thing here is that DII is capable of absorbing the pressure, but FII becoming crazy net sellers. Moving on about quarterly results, Colgate-Palmolive, Dixon Tech and Lakshmi Organic all three posted very good results. They did beat the analyst estimation. In case of Vodafone Idea, in revenue, ARPU and EBIT wise, they posted very good, but their net loss increased to over 8,700 crore rupees compared to previous quarter 7,840 crore rupees. Then, as per stock open interest, HDFC Bank, Indian Hotels, Manappuram Finance, DLF and IndusInd Bank got an increase in open interest along with a negative close indicates the short build-up. On the other hand, it's just Punjab National Bank with an increase in open interest with a positive price close indicating long build-up. As a summary, US market closed crazy negative. However, after that, because of European Union Brussels summit, global momentum improved significantly. Even now, US future market finally trading in the positive region. Also, GIFT Nifty indicating a gap up opening of 60 to 100 points and Indian ADRs looks positive as well. However, there is another breaking news. There was a conflict escalation in our border. It's very minor but not sure how it proceeds as time goes on. So keep an eye out there as well for any potential escalation. Then about the things to look out. Today, Reliance Industries, Maruti Suzuki, SBI Life Insurance, Bajaj Finserv, Bharat Petroleum, Cipla, Dr. Reddy's Lab, Union Bank of India, Indian Hotels and Mahanagar Gas are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, early morning, Japan's consumer inflation and Chinese industrial profit data is due. Then there is not any macro that I am aware of during our market hours that can impact our market. However, in the night, US PC inflation data and Michigan consumer sentiment is scheduled to release. One more thing about oil, it dropped around 2% since US export-import data showed that in October month, US imported only just 2.47 million barrels of crude oil per day from OPEC plus countries. In comparison, in September, they imported 2.92 million barrels per day. It clearly creates the demand concerns. Thus, at the time of this video, WTI crude trades at $83.5 per barrel and Brent crude trades around $88 per barrel. Coming to technical, Nifty opened a gap down of 95 points near 19,000 level and it extended that selling throughout the day, then hits the low of 18,837 and closed at 18,857. So down 265 points compared to Wednesday's close. Thus, it forms another bearish long candle. So, combining the last 3 days, it forms the 3 black rose candlestick pattern formation. So, undoubtedly, it's a downtrend. However, it's a common practice to analyze this pattern alongside with other technical indicators to evaluate whether the stock or index is in an oversold region. For example, if RSI value is below 30 means. To answer that, presently the RSI value of Nifty on the daily chart is at 26, which technically places it in the oversold condition. And also now Nifty has reached the region 18,860 to 18,699 where the cluster of support is present such as 200-day exponential moving average and 40-week moving average is trending down towards the weekly lower Bollinger Band. So, there is a high chance that this lower Bollinger Band could act as a potential good support. If it means, then we can expect a pullback till 19,000 to 19,050. However, I think it's only a temporary pause or pullback in the overall downtrend and expecting that pullbacks will be used as a selling opportunity. Technically, the short-term trend suggests Nifty is likely to drift towards 18,600 to 18,500 level. Anyway, for today, 18,700 to 18,650 shall act as the crucial support zone, while 19,000 to 19,050 is the immediate hurdle zone. In case of Bank Nifty, in the last few sessions, it faced more substantial selling pressure than Nifty, and currently it moved below its 200-day exponential moving average, which is 43,264. Generally, below the 200-day exponential moving average considered as a huge bearish signal and expecting it to maintain that bearish undertone. For now, currently it's heading towards 42,000, which is the very important psychological support. Thus, at least at 42,000, we might expect Bank Nifty to show some resilience where we can see huge fresh put writing as well. So, as a summary, the fall in last few sessions had been very sharp and it's definitely in an oversold condition, which increases the probability of a pullback. Thus, we can see some pullback till 42,500 to 42,600. However, like with the Nifty, I think any bounce back is temporary and it's unlikely to sustain that can result into a trend reversal. Overall, the trend is negative and from short-term perspective, expecting it to reach the target level of 40,850 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.